Hey everyone, welcome to another market review. So yesterday it tried to crash and go down. It got saved again. Uh, at open it was 92 downfall. It kept it that way for a couple of hours, but eventually it started rallying and recovered. It's not like a bottom, but it's more bullish, and I'll explain why. So this is what it looks in breadth. Went down, closed at 76. Positioning breadth went down and is nearing zero. So problem is, let's go back to normal. Problem is the rest of the world. Like we have, where is it? We have China going down pretty big. We have Nikkei as well, like three big red candles in a row. Blah blah blah. STA, Kospi, another 12% after yesterday 7%. AEX down, French market, German market, Spanish market. This is Stoxx 600, UK, and whatnot, and that's kind of it. So it's not that we are at the bottom. I don't think we are. I think we will go lower later. But for now, the current setup looks eerily similar to previous intermediate bottoms. Let's do US 500. Oops. And we see this red hammer candle on US 500. It had a huge range, not that big, 247. But it wasn't that initiation candle like a 3% one, 2.5, 3% one that I wanted to see to showcase, to signal that we are just starting to roll over and we will accelerate down. This was more like a intermediate bottom candle. Something like, let's see if we found something comparable. Hmm, Something like this. So this one looks very similar to what we have now. And we will, again, we're not gonna bounce. We will be moving within the range of this candle for a couple more days, potentially maybe 1 or 2 days. But the inevitable outcome is that we bounce and we go higher. This is not relevant, but more like I said, I think we are in a bear market. Also, a similar candle here, similar candle here, in which we go a couple of days within the range of this candle, but eventually we go up. And the reason why I started with mentioning the rest of the world is because these are super oversold. So it's the reason why I think we get a bounce is because we will get a global bounce somehow. Uh, because this cannot support another more than one more day of dropping. So this can go down another day, but we get like to a 10% in 4 days kind of range, and that becomes unsustainable to uh, just people will buy the dip. We saw yesterday that they bought the dip on the US immediately. Like they couldn't even wait a single day to not buy the dip. They bought it immediately, which is it is what it is. I'm not saying that they shouldn't have done that. Maybe it will prove the right choice. Uh, but the market mechanically cannot support another more than a single day of this type of waterfall kind of drop in the rest of the world. And when the rest of the world recovers, it still won't outperform US. I think US is going to be the winner here, and I still stand by the mega cap rally that I mentioned. But we will basically maybe go down a bit lower. There is the potential to make a new low here, but it will be just marginally low, like just take out 6700, maybe go to six. This will be the maximum. This is the short trigger, like we get rejected for the long trigger, or we did last year. I think there's a potential to get rejected by the short trigger if we go a bit lower, but I'm 99% sure this will be a bounce and will be like a bear market rally back to here, maybe potentially even going for the full V. So From the looks of things, this is how I see it. Also supported by VIX, which couldn't hold a breakout, got rejected. It's very unlikely to see VIX going higher after this type of double rejection, red candles. Like it's very rare, only happens in crashes. I don't think we're in a crash scenario. Like for example here we got double rejected big, but it went higher. But when we start seeing this type of red candles, we're nearing a shorter top. Like I said, I think we go lower afterwards later. I think we are in a bear market, and the bear market is multiple legs of downside, and I think those will be coming. But for now, this looks topped out. Like the strength in US, the rotation we see in US back to software. Sorry, that's not this one, FinViz. So we see rotation in software, semis getting hit, but semis will be getting super oversold comparatively. I have semis here. Let's look at a couple of graphs. SNDK, I mean, it will hit like the 55 EMA, and it's a nice buy there. TXN is at the 55 EMA. Nvidia maybe goes lower, like to 165 here to hit this AVWAP. Do a fake out under this level, but again, not really has a lot of downside. 55 EMA bounce on ASML, ON 55 AVR from high bounce. So they're all coming into support. This one closed, STS closed under the 55 EMA, but we have the trend line coming up soon. Uh, TSM can go a bit lower again, but maybe we hit this was a ghost print from 2 weeks ago. Let me put a alert here. So may go as low as hitting that. You get the point I'm trying to make. Intel is probably going to be an AVU up here soon. Western Digital, Qualcomm doesn't matter. MU. So this is kind of the setup. Getting very oversold on these names as well. And we will get a bear market rally. This is my take. Seeing how things develop, seeing the way the candle looks that we have from yesterday, seeing the failure to break down. I It would be nice to go all the way to 65, 655 to get to the short trigger, and to get to the basically the edge of the broadening market. We took out this low, but technically it's enough to do like a broadening, maybe something like this. But to do the clean one, which is more like this, would be nice to get to 665, but it's not mandatory, as we saw in the other cases. And it was here. It almost never takes out the low. So here we didn't take out the low, we just went sideways a bit. Here we didn't take out the low, we rallied and then we went down, but we did not take out the low. Other examples that we have here as well. We went down, but we didn't take out the low afterwards. We just kind of the halfway of the candle was the reversal point. So it seems unlikely that that will happen, but it would be nice to get it. If we get it, I think it's a good buy the dip. Um, Semis names will be very appealing in that case because they will have a big counter rally. The so Kospi is basically Samsung plus SK Hynix. So those names will be going up no matter what because they make a lot of money with the DRAM setup. SDK and whatnot, and MU will be making a lot of money as well. So this cannot support another red day. Like if it has another red day, I expect it will be a full reversal. So it will go down. Maybe let me take a look. Oh, 5K is basically the level. So you'll go to 5K, maybe overshoot a bit, like let's say here to get to this extreme, the low here. So overshoot 5K and then almost certainly it will bounce because it's way too oversold. It dropped like 20% in 2 days. How much is this? It's- Yeah, almost 20%. No, 20% in 2 days. This is crash level stuff, and it's there is a reason, but it's not something that can be sustained considering how much money Samsung and SK Hynix will be making and will be making. So it should open somewhere around here, 118. I think this is a viable dip. Since people bought the dip yesterday, they will be underwater and maybe we get a bit of a push down on open because they get liquidated. But I think other buyers will step in and we will maybe go to like 115 and then we recover and we go higher. So depending on what happens next, this can become a much bigger bounce if we get the taco. If we do not get the taco, this will still go higher. Uh, for this is this here. This is uh, Ukraine war start. So market rallied, then had a bit of a pullback, then market super rallied. War is irrelevant for the market one way or in the short term. Like positioning, basically market mechanics trump war in the short term, but then we potentially go down a lot if we do not get a taco on the new Gulf War. But even if we get a taco on the new Gulf War, things are very fucked up over there and they will remain fucked up. What Trump did is basically start a local war between the Arab states. It's not, it won't matter that the US backs down or Israel backs down. The Arabs themselves now have grievances with each other. They bombed each other, Qatar, Oman, uh, Saudi Arabia, United Arab UAE, Iran, and so on. So because they bombed each other, they now have a grievance. They will continue this uncertainty for a lot longer than we think. This could basically be a 20, 30-year war between them, in which they get constant bombing randomly. They attack each other with drones and whatnot. So Dubai is not going back to what it was. UAE is not going back to what it was anytime soon, in my opinion. We'll see if this holds true. But when the Arabs start bombing each other, it it it's something that will last for generations. It's not something that can be turned on and off even if Trump leaves. So things will remain fucked up in that region for a while longer. Oil prices, while maybe they go down after the war is over a bit, there has to be a risk premium in oil. So I don't think we're going back to like 57, 60 anytime soon. Uh, Maybe we get a blow up and we hit the 180R, which is 90. We basically hit this level, which was the target. And by the way, this is why I was saying now it's time to own oil, not oil stock. Yesterday when we had uh, oil at +5, oil stock were almost all negative. So this is why. This is the reason why. So oil keeps going higher, but oil stocks are not going higher because they are stocks and react to the market. So oil will remain high. Um DXY will keep going higher, even though it may pause briefly while the market rallies. And that's kind of the whole setup. So to recap, I think we have at most one more day of going down, and it's very likely that it will be similar to yesterday, which we go down and the dip is bought and then we rally. The most we can see in this leg down is 665, sorry, and that's the ideal entry point, but it's not a given. Most likely we will just move within the boundaries of the candle where was the open yesterday. So most likely we will move within this range. without making new lows. So I don't know, maybe 670 is the entry, even higher. Doesn't matter. Within the range of this candle, we will attempt to go lower again, but then we will bounce. There's a buying opportunity in Korean stuff. There's a buying opportunity in semis. Uh, Whether it's a longer term buy and hold or it's just a very short term hold for the bounce, I don't know. If we get a taco, maybe this actually makes new highs on the market and the rally goes much higher than I think right now. If we do not get a taco, then it will last maybe until OPEX or at most until end of month. So we have 2.5 weeks until OPEX. Let's say 3 weeks, 3.5 weeks until end of the month. I'm not counting this. So this is the interval when I expect the rally to last. And afterwards, it depends what happens during that interval. So that's it for now. Have a good one. Bye bye.